Let's take a look at some charts on Comp for Brave New Coin. So Compound Finance, Comp, is a non-custodial lending and borrowing platform on ETH. The interest rates are algorithmically derived based on supply and demand of the asset. They currently have, what is this, 9 markets available, and through the governance mechanism, they can choose to add more, or more will be added depending on how the voting goes for any individual asset. Most of the liquidity is currently in ETH and BTC, followed by stablecoins, USDC, DAI, and Tether. And there is a governance component, like I mentioned, where there are proposals that can get voted on and executed based on votes from the holders of Comp. Most of the top holders are hedge funds, so it's unlikely that they're going to vote against their best interest. Some of these also appear to be college-related crypto groups. Leshner and Hayes are the two founders of the protocol, which is how they're holding so much individually up here. If we look at the TVL in USD, it's continued to increase. It hit nearly 7 billion a few days ago, rising in ETH, definitely rising in BTC, and rising in DAI. So all in all, whatever they're doing at Compound to be number 2 on the list above Aave now for TVL suggests that the market is very comfortable with using Comp as a platform for lending. Now, those interest rates are going to be variable, like I said, at the open, but there's certainly large enough incentives to participate in these lending and borrowing markets, not only Comp, but Aave and any other protocol that's similar. If we look at the token stats, the on-chain token stats, it's a bit dire because transactions per day are at a steep all-time low here. This says that, to me, there's really no reason to use the token. I mean, that's what the market is telling me. That's what the on-chain stats are telling me. We had the distribution back here somewhere in June, and probably when the votes happen, there's some movement. But all in all, it doesn't look like you need to move Comp too often, because despite the TVL skyrocketing to crazy levels, transactions per day are just at basically an all-time low, effectively. Average transaction values are sort of in the middle of the road and rising. So you're seeing fewer transactions, but larger transactions. Part of this could be an ETH fees effect, but in a vacuum, that's not something you want to see. If we look at active addresses for the token, active addresses have declined to multi-month lows. This is October levels of active addresses in the fill here. So again, not bullish on the token. NVT is rising, which says market cap is overvalued based on on-chain activity, which makes sense if on-chain activity is declining. So despite the divergence here, yeah, this is just an insane TVL, right? 7 billion since, it's doubled since January, February or more. Just absolutely insane, bonkers level TVL. On-chain stats do not look bullish at all. So there's definitely a separation between the token price and the actual protocol itself. Now, looking at the 12-hour Comp USD chart, it's a little troubling again because we're seeing an M double top potentially form here with a base of around 350. You'll probably see support at around the 200-day moving average, or it's actually the 100-day moving average, but probably support there, probably at the monthly pivot. You'll see support at 285. So, maybe there's a rebuy between 285 and 325, but I would not want to be sitting in this right now looking at this chart and knowing the on-chain stats. If anything, these on-chain stats are a metric for speculation and just people moving it in and out of exchanges or whatever. And almost always this is bullish when it's rising and bearish when it's falling. So to see these so stark, so quick, coupled with this M double top, it's not bullish for me at all. Really, this isn't a rebuy up here until it's at breaking all-time highs or it's sub 300. I mean, that's really where it stands, because all this is going to be massive chop. Maybe it M's, maybe it doesn't, but trend-wise, this does not look good. I mean, look at this massive gap here on VPVR as well. you don't really start to see support until sub 250, and then you get previous all-time high levels. So I have a bad feeling about this chart on the bullish side of things. It definitely looks bearish. If we look at the 12-hour cloud, 12-hour cloud is also telling you to be careful as it dips into the cloud again for the second time since February. I mean, this is the trade you want to be in, obviously. You know, this mess up here isn't an obvious trend. So if you're a trend trader, you're not trading this. You are waiting for a clear signal. If we measure that M double top from high to low, we get a move between 150 and 220 as far as like the expected potential retrace here based on fib extensions. So I'll take 225. You know, I'll throw some chips in that wagon at that point in time. So I think some good dip buying opportunities are coming up for Comp USD. Comp BTC had a head and shoulders which broke down as expected a few weeks ago, and on the 50 and the 200 we're getting a bear cross once again. So this does not look bullish either. I mean, you can argue M double top as well. You could argue, well, maybe it's mean reverting and it's going to support here and maybe it'll retrace to 6666. It's just there's no clear trend here, and it's definitely not bullish for me. I just think this needs a ton of time at this point. It's sort of at its equilibrium based on the lows and the highs, and it's probably just going to chop around for quite some time before this actually makes a move one way or the other. There's no bullish divergence even here yet. If you want to take a knife stab, you know, here there was a bullish divergence on this low and a further bullish divergence on the next low. So when you get a series of bullish divergences, that's your sign that, okay, the bottom is probably in, bearish momentum is waning. We haven't gotten that yet on the 12-hour currently, so that's what I'd be watching. Comp ETH also looks like an M double top situation. 5200 12-hour EMAs are crossing bearish. It is holding on by a thread at whatever this VPVR is being measured by. This isn't a direct pair on most exchanges, but if you're trading comp, most people are exchanging ETH to do so through DEXs. So there's definitely an inverted head and shoulders, like the half of it was formed here, shoulder, head, whatever. And then it just busted up. So we could potentially get another shoulder somewhere down here to these lows. And then the neckline would be 028, something like that. So I love comp, I love DeFi, I love lending and borrowing, decentralized, non-custodial, love it all. The on-chain metrics look abysmal. The USD pair looks ready to mega dump over the next month to 250 or lower. There's really no support on any level above 250 if it does break the previous lows. And the BTC and ETH pairs don't look much better. So for me, this is a dip buy. Hopefully Q2 in April and beyond is a little more generous to comp. But right now things look particularly bearish.